Howdy, mate. Oh, look at that Ferrari. Nice. It's like a 99. Oh. Hey, let me remind you that trading is risky, not appropriate for everyone. Yeah, I like it too, Kenny. I like that song because it's very positive. Life is great. Life is grand. Life is good. Life is beautiful. Oh. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yeah, I'm all about the positive affirmation. Gee whiz, look how I can throw this away. Hi, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. We're a boutique foreign exchange brokerage firm. We have a unique offering, world-class customer service, much faster than average execution speed, verified by third parties. So your big fancy pants brokerage firm somewhere else, if you have one, is slow, generally speaking. They're slow. We're fast. If you want your trades to be executed quickly, you would open an account with us. Our spreads are also very competitive. Like I said, we have better customer service and we're better looking. We're just generally nicer people. We love you. We care about you. We want you to succeed. Yeah, just natural though, Ryan. It's not like it just comes natural with a big heart that you know how to dance. Hardly even tried. It's true. But customer service is from the heart, and it's a lot like dancing. So here's the thing. We're going to take over the world by earning people's respect and loyalty through investing into them first, through these educational and emotionally supportive, possibly entertaining webinars. Now you know the evil plan. Oh wait, it's not evil at all. I do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. Forex.Today is a community where you can post trade plans, share ideas with each other, and leave each other feedback and comments. It's a way to really improve your skills, but also create the discipline that you need to succeed. So for example, are you taking trades that you're not even planning out in advance? Imagine if you planned out your trades in advance, took screenshots, wrote out planned details, and posted them on Forex.Today just to keep you focused, legitimate in the sense that every trade has a documented plan. Imagine how much better of a trader you'd become simply because you have the skills of patience and discipline. Have you found that no matter how good you are at technical analysis, it doesn't mean you're going to be a successful trader? But we know all successful traders have patience and discipline. So at some point, you're going to have to focus on that. If you ain't broke, you ain't broke. Right, Brooke? Brooke. You know, you'd be the perfect poster child to be successful, Brooke, right? The richest guy, the richest person in the room is Brooke, like broke. Hi, I'm rich, but you can call me broke. I'm broke, but I'm rich. Did I meet you? So anyways, no more fun, no more games. What are we doing here? I got to open my window. It's hot. All right. Holy moly. Dang, you know what? I look like Rob Booker's brother getting the scratchy beard and the big glasses. Oh my God. Yeah, gee whiz. Rob's so nice, though. I'm a bitter old man. Rob's so nice. All right. So anyways, where do we go? Where do we start here? We got some gold. We identified a bottom last week, and on Monday, it came up on Wednesday, hit our target. This is where we should stop trading it. And on Thursday, it looks like it topped again on the zone, and that be that. And you can see we even came up to the exact pip, hit a monthly pivot. Now imagine observation. Right? Look at the observation. Would you recommend to people, once you hit this red zone, to stop trading? I mean, I remember writing like lectures and even writing my book about pivot points and like naming these things. Like, what should I call it? It's really important. The pivot profit zone. It's not a place to enter a trade, it's a place to exit a trade. Like, just nobody taught me these things. It didn't exist. And this is why, you can see, this is why. Sometimes it goes higher, but most of the time it respects these levels. It respected the level here, respected it here for a while, almost hit it, right? Hit it here and respected it. Almost hit it and respected it. Hit it and respected it, right? Hit it and respected it. Didn't here. So most of the time it respects these levels. So again, most of the time, right? Most of the time they're respected. Now, how about the counter trend trade? Right? If you took the swing trading course, you see it there, you see it there, and you see, well, no, only there. Only those two. But the funny thing is, both of those worked. And it's gold. Swing trading gold, huh? So anyway, so what does this mean now? Well, we're not in we're supposed to be on our way to this area up here. So I'm thinking down maybe today or Monday and then up is just basically what you're looking for. There's nothing to it than, some profit taking at a place where you should take profit. Oh, you can't see that. Okay. Up now. Some down on a profit taking, up to this level, and then probably down because of this, and then up to the target. So that's like the next 2 weeks of trading. Okay. Remember, we talked about all of this here and here, and this one failed. Remember I said maybe up to this area here? That's valid. Okay, up, down, roll reversal. It worked a little bit, then it fell. Then the plan B. Remember, there was only two trades. There's buy it here or buy it here. So we were talking about that second week of October, a month ago. It's cool, right? Talk about patience and discipline. If you were a bull, you'd buy it here or here. One of them did work. Target is the same. This is why gold sucks, by the way. Gold doesn't pay you to be patient. This is why Forex is awesome. Because Forex pays you a lot of money to be very patient. Because you earn interest. You have interest income. Yeah. You don't see it now because you're not trading big money. You don't see it now because the spreads are low, or I should say the interest payments are low because of interest rates. But someday, mark my words, it could be a very significant part of your successful Forex trading business. And I always talk about John Taylor, in fact, not the John Taylor from Stanford, another John Taylor, who started the first Forex trading firm, first hedge fund specifically focused on Forex. And he paid himself, paid himself salary, because his hedge fund became big, it managed billions of dollars, he had hundreds of employees. And he put himself on a salary after a while, right? And he paid himself $25 million a year, declared on IRS income tax statements, $25 million a year for about 30 years. Damn, son. 25 million a year. 2 million a month. More than 2 million a month. Right? That's what? 1 million every 2 weeks? That's $100,000 a day for 30 years. Not including weekends, though. Yeah, you're right. Not including weekends. You got me. But the thing is, here, this will blow your mind. They didn't even try making pips. In fact, they may not have ever made a pip. They only earned interest and they hedged everything else out. Well, first of all, Ryan, he wasn't stealing from people. That's why I hate those movies like that, about scumbags on Wall Street, because most scumbags on don't work on Wall Street. Yeah. No, I know. So here's a guy. So think of it. Here, John Taylor had a Forex fund and it earned interest on its leveraged positions. Yeah, it was an honest, viable business. It lasted for 30 years. And then it died during the financial crisis. And it didn't die because they were over leveraged. It didn't die because they had bad bets. It didn't die because of anything it did. But when the market was crashing and people were dumping everything because the entire tide was going out and lowering all ships, people were just going to cash like, oh my God, my stock portfolio is crashing, my commodity portfolio is crashing, just like, and all of a sudden they're like, just get out of every position, in every market, in every asset class, people are just going to cash. And he got nailed by redemptions. But it wasn't like unprofitable. And that was that. And it put him out of business. And that's where I learned about it, where I'm like, well, you know, that he was making all this money by earning, right? So like an account, like a small account, if you have 10 standard lots open, that's $1 million, right? But you could do that with only a few $1,000s if you do it well, meaning you buy and it gets profitable, you're up 200 or 300 pips, move your stock to break even. Now you could trade the profit. So then you add a second one and then a third one. It might take you a year, but wouldn't it be a wild? Let's say you spent all year and you have $1 million position open and you only initially invested $1,000 into your trading account. I guess you'd have to have a couple more than that. Let's say you put in $5 grand, right? And over the course of a year, you were able to open 5 or 10 positions, each one above break even. Each one has a stop loss at break even. Now you have $1 million in the market, right? And you're earning interest from the $1 million position. That's pretty cool. Okay? That's pretty cool, right? And you're like, man, I only got a few $1,000 in here. I'm holding $1 million, right? Well, that evens out, Ryan, because it ends up being 7 days a week. You don't care if one day is worth more than the other on your average, right? But to say, like, if people ask you, what do you do? And you're like, well, I'm in high school, but I have a Forex trading account with $1 million position, right? I earn $35 a day. But anyways, it can get very big. It can get very big. especially when spreads are high. And there were times when I knew people, like just amateur Forex traders, that were making over $1,000 a day in interest. Yeah, life was beautiful. Yeah. I used to make like $10,000 to $12,000 a month on my PayPal account interest payments. PayPal paid me like $12,000 a month in interest. I wish those days were around. Just PayPal. But anyways, maybe it wasn't 12. It was certainly 5 or 6. But anyway. So anyways, that is this is where the patience and discipline will come, and why gold is not the best thing to be trading, because if you hold gold for a long time, you're not earning any interest whatsoever. If you're holding physical gold, you have to pay for a vault and a guard and some bullets and, you know, rent. So they call that a carrying charge. It's sort of like if you're Nabisco and you make cereal products for consumers and you get a good deal on wheat, so you buy wheat for much cheaper than you normally do, but you don't have a use for it now, then you're going to have to store it somewhere. Well, you're going to have to pay for the storage facilities. That's a cost, right? So anyways, Forex is great because you can get in these positions and they pay you. Okay, pay you on your leverage. Always remember that. They pay you on the leverage. So a kid with $1,000, or let's say $5,000 in their trading account, but was very patient, disciplined, slowly opened 10 positions over the course of 1 year, and has $1 million position, now gets paid interest on the $1 million, like he's holding the $1 million in foreign bank accounts around the world that are paying high interest. That is pretty cool. So you used to be able to clear like 8.5% on your leveraged money. So now let's say you cleared 5%, right? 5% on 100 to 1 is you're earning 500% a year, right? So the kid's doubling his money. Or doubling it, making 5 times his money. So anyways. Yeah, Ryan, so there was a time, Ryan's talking about the ZAR and stuff. Lira and ZAR and Iceland were pretty interesting back in the day. Kenny says, so it's better to earn interest from Forex than instead of bonds. Well, can you buy bonds on leverage? And if so, right, but if so, would you get 100 to 1? No, so what I'm suggesting is if you lent Ford Motor Company $1 million and they paid you 5%, you'd make 5% for a year, and then they give you $1 million back. In Forex, if you could do it, right, you could get the $1 million, but it might only cost you a few thousand, but they'll still pay you the 5%. Whatever. Of course, nowadays you can't get 5%, but yeah. So Forex is better, in my opinion. Also, a bond is not necessarily liquid, so you can hold it to maturity, but you face duration risk, you face inflation risk, all that kind of stuff. Okay? So, for example, what happens to the price of your bond if interest rates go up while you're holding your bond? Your bond pays you 5%, interest go to 6%. Price of your bond is going to drop. So now your bond is worth less. Now, if you're holding it to maturity, I suppose it doesn't matter, but you still could get a better bond today, but you're locked into your old bond. So you hold it to maturity. Or for some reason, you run into some problems and you want to liquidate, you're going to get less for your bond than you paid for it. You see what I mean? So that's a risk. It's literally a risk you can calculate. In Forex, you're holding cash positions. So if interest rates go up, you get a raise. And if interest rates go up, not only do you get a raise, other people are like, damn, did you see that Aussie dollar? Interest rates are going up, man. Oh my gosh, that looks good. And all of a sudden, other people want to buy it. And it pushes the value of your position up more than the interest rate did. So you get more money every day added to your account from the interest payment. You're collecting yield. But now demand pushes the value of the Aussie up, and you can make way more in pips than you do in interest. So all of a sudden you're like, dang. Okay? So it's good. All I'm saying is it's good. You don't see it now. And by the way, if you only do these smaller trades, like you're trading your 15-minute chart and your 1-hour chart, and you're picking up 25 pips here, 18 pips there, that's a good start. Those are not scalps. Those are trades that last a couple hours. You pick up some, but you're never going to get rich, ever. It's impossible. Right? You need to let winners run, and you need to collect interest. One day it'll be the cusp, the crust of what you do. Okay? So, whatever. So you don't get that in gold. So very nice. You were patient for a month, and you know the value of gold went up, but you didn't earn anything above and beyond that for your patience. Okay. So what's going on the piggy? Okay, I think I see it here. I want to find that. It's hard to see. All right, so we have a little support zone, right? For some reason, I can't quite see that. I think I have it off of this bottom here. There we go. All right, bang, bang, and then this, and then that. Okay. So we had two scenarios here, right? You sold it high in the earlier part of the week, and we were expecting, you can see here, a pullback and a modest move down to this level of support. I'm really having trouble seeing that, but I hope you guys can see it, right? We had this as a sell. That's the perfect sell spot. Oh, that's right. We created the sell zone last week. So right? So anyways, Monday, we hit that. We hit it again, it looks like about Tuesday. And then on Wednesday, we have it, okay, it's made a lower low. If you're still a bear, you're going to fib this down. You're going to look at the 618. You're going to look at this pivot cluster, and you're going to believe it's going to come down. And it'll hit here, which is also a pivot cluster. It's obviously price level support, and probably will bounce. Okay? Then there was one other piece here. If that occurred, it may bounce, because it is support, so you should consider it a bounce. Or this level breaks. Either way, there's still a huge possibility that we go back to the top of the range, right? So I think on Monday we talked about sell here or sell here if you're a bear. Can anybody confirm that? Do you remember it that way? As a bear, you either sell here or you sell here. Okay? And that'd be that. And if you're a bull, this is an M3, right? You see it right here? This is a price bottom. This is a price bottom. This is a price bottom. Okay, so I think most people in the market that were bulls would probably look at this whole area, this region, not necessarily just a specific price, but sort of low enough to put a trade plan together. In particular, you know, it starts at the price, right? And then it goes with the pivot. The M3 is just sort of like icing on the cake. I think the central pivot's about here, right? But the real buy zone is the M3, then you look left, you look left, you look left. And then, of course, if that's what you feel, you know, then you're starting this kind of stuff again. Maybe even this. Even though if you're a bull, you'd love to let it run, right? Nothing here tells you to let it run above these areas because it's not in an uptrend. How would you let it run if it's not in an uptrend? So, you know, you probably, if you were conservative, you'd probably be, you know, pretty concerned about this up here for profit taking, certainly up here, right? Okay. And to me, a common message you hear from me is that you have to make your decisions before you even look at a chart. And I think if you can get to that point, and it's so weird that people refuse to do it, right? I mean, just to psychologically, what is it that makes people know it and understand it but refuse to do it, right? It's a really strange part of humanity, but we've all done it, right? Where every day you hear that message, like, you just need to be a bull, you just need to be a bear. There are no answers on your chart. If you can't make a decision based on intellect, just flip a coin, but whatever. And we're all like, okay, great. And nobody does it. But you could see, like, if you were a bull, you would be looking for things like 1, 2, 3s. You'd be looking for support. You're in a buy zone. You're looking left, always looking for support. You're buying at psych levels. But the thing is, you wake up in the morning, you know you want to buy. Right? I mean, how many days did we talk about gold going up and the US dollar losing value? I mean, like 5, 6, 7, 8, 9, 10, 11 days in a row. Well, some days it didn't give you an opportunity, like going into NFP. Well, the dollar strengthened and the pig lost because of stuff in pig land. Okay, that's fine. But there are other days where if you're bearish on the US dollar, I mean, I'm not even looking at this as British pound. If you were bearish on the US dollar based on what you analyzed on gold, or you flipped a coin, you can find support here. You can find reasons to buy. And you're not even looking to sell. It's not even in the cards. It's not even plausible. What do you mean sell? I'm bear on US dollar. And that's that, right? That focus keeps you out of trouble. And when you're swinging both ways like a broken gate is when your trading gets messy. And how many times have you taken a loss and 10 seconds later you're in a new trade going in the opposite direction? Well, if it ain't going down, it's going up. Oh my God, really? That's what you want to do for the rest of your life? Yeah, of course, losing more, because that's the losing way. Right? So that's that. And if you're a bear, what are you doing right now? You're preparing to sell this. Now, maybe you're going to be a little cautious because this has failed. But as a bear, look at that! OMG! You should know what that pivot means. And you should say, ooh, well, if this, on this time frame, over here at that price, and you're setting up plans, but you have to be a bear. Now, if you're a bull, you're like, that's nonsense. We're going to go right through that, and we're on our way to M4. Okay, great, but you're a bull. And you planned that down here. But if you're a bear, you should be looking for the next trade, right? The next trade being this. Okay? If it does it up here, that'll be very disappointing because it means different things on different time frames. That would be very disappointing. So you want this one to work if you're a bear. And I'm all for the bearishness. Look at this. I mean, it was set up a long time ago as a bearish move. But we're talking about that weird wedge. Okay? It's in a weird wedge. A lot of indecision. Well, you know, it's a pound. So we're revisiting oil. Once again, for 5 weeks in a row, it went up because it was our plan for it to go up. Then we hit our targets and we're like, whoa, it's been going up and it even skyrocketed up to our target. Great, stop trading. Maybe profit taking drops the price back down to the central, but the main point here is stop buying. Certainly take some profit off the table, right? Isn't that nice? Now that we've spent a solid week, and I'm sure you're hearing on the news, oh, well, it's because of this, it's because of that, it's the Syrians, it's the Iraqis, it's the Russians, it's the Saudis, the Venezuelans. Really? It's the Venezuelans. They can't even afford to buy a can of Coke. Yeah, Erica. Almost every day I put them on YouTube and on Forex.Today. Have you guys subscribed to my Forex.Today feed? You're updated as soon as I upload. Yeah, you have to follow me. I don't think most people follow me. All right, so anyways, gold down, or, well, no, wait. Gold hit our target, oil hit our target. So now we need, next week, we need new pivots and all that kind of stuff. CAD. Do you guys remember creating this reversal as it was still going up? Huh? Do you guys remember it was still going up? And I'm like, whoa, 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 whoa. And it was created on a divergence between the price of oil and the value of CAD. Isn't that cool? We invented that. That's what I like to tell my children every once in a while when they're getting sassy. I'm like, yeah, you know what? You know what's really cool? I made you. I invented you. Yeah. It's like you didn't even exist until I decided that I would make you. And then I made you. And here you are. And now you're bitching at me? I'm like, really? Because when I was making you, I wasn't thinking like, this little thing's going to start bitching at me and being sassy. Because that's like, that'd be a weird thing to want, wouldn't it? Yeah. That's weird. That's really weird. and they're like, is that sarcasm, Dad? Yeah. I'm like, so you better watch your mouth or I'll make you watch Downton Abbey for 3 seasons. Yeah. No. All right, so anyways, we're on our way to the target. There's a monthly target here. There's a weekly target here. Very cool. We've now done the 100% move. Cool, right? This distance is this distance. So very cool. So we probably need to make a move like that. Whereas an Elliott wave technician guy would say, oh, well, we need a 3-wave correction or something here on a smaller time frame. And then, Cool. And then that would be a big roll reversal. So it's just nice how it all comes together. Part of this had to do with gold. Part of this had to do with oil, right? Remember, we picked the bottom, and I don't like picking bottoms because that strategy stinks. But we picked the bottom on gold, saying, well, it probably won't fall further, so maybe gold will go up. And if gold goes up, that would create US dollar weakness, and that would bring this down, especially if CAD is weak, yet oil is strong. There's a discorrelation there. So we put all that together, and now we're in, well, it's been falling 2 solid weeks now. Killer that it gave you time too, right? Remember how amateurs always say that they're missing it? Like even look at this one, right? So it's skyrocketed up, double top, lower low, lower high, lower low, lower high, lower low, and now it's going to do another one, right? Like there's so much time to set these up. Okay? And notice how like key pivots and key prices and key fibs all come into play. You should really break this down and try to relive it. How the heck did we come up with that? And how could it be so precise? That would be something to ponder over the weekend. Euro USD. I guess we got to do Euro USD. All right. So we trapped it in a range, right? Let me go into a 1 hour. There we go. All right. Did we do this yesterday? Yeah, it might have been yesterday, right? Trapping it. How do you trade a trap? When I draw things like that, what does that mean to you? What are you setting up? Because you may not have asked a question when I did it. So, how did you interpret that? Wait for a break and then trade the pullback at roll reversal. Beautifully said, Ryan. James says break and R and up. Even faster, James. James doesn't waste time. Yeah. Ryan can be verbose. That's all right. Yeah, Ryan wasted a whole sentence on that. Yeah. Which actually means that he's a pretty fast typer. Yeah, so much done. Right. So, yeah. Do you see one opportunity here based on that simple knowledge? Yeah, I see 2. Too late. Okay? Breakout, pullback, gone. That is one. On a different time frame now, on a different time frame, switching over to the 4 hour instead of the 1 hour, you see this. Everybody got it. All the cool kids are in on this. Okay? The 1 hour and the 4 hour both produced. Any questions? You can see I have it all grayed area for you. You see the weekly pivot and everything. I mean, it's like silver platter stuff, right? Well, you would anticipate it on the 4 hour and then trade it on the 1 hour or the 15. It's a 4 hour plan. To me, everything is entered on a 15-minute chart or less. You could do it that way, but the money shot here is like that you trapped it, you observed the breakout, and you set it up for a buy down here. How you do it, whether you scalped it, a 5A cross, a 5-minute chart, 5A cross on a 15-minute chart, working order, fib, psych, I mean, it doesn't matter at that point. I don't care. As long as you were waiting for a breakout and a pullback, you got a breakout, you got a pullback. What makes you pull the trigger, buying low after a higher high, is irrelevant. Right? So, wow. Ryan used to be a secretary, I guess. "100 words a minute." Cool. Yeah, I mean, look, up, down, gone. I mean, that's just, both of those are pretty straightforward. I mean, very straightforward. They are straightforward. Oh, yeah, well, it depends on your trade plan then, Mike. So are you in it for a swing, a spot, whatever? So, for example, how do we do this? There's one methodology, for example, that says the width of this is your target. So maybe you play it like that. So let's do it this way. There's your top, there's your bottom, okay? That would be your target. Okay. Won't let me grab it, but all right. So you get the idea, right? So your stop there should be at least that level or perhaps closer. But that would be a 1-to-1. Okay. You know, if you're a very active trader, okay, Mike, if you're a very active trader, I like to enter all my trades exactly the same. So even if I plan on being in the trade for 300 pips, very often I enter trades with like 25 OCOs or 50-50 OCOs. 50-50 is pretty standard. So I could just go up, down, chow, and I'm in 50-50. Then I adjust the stop, then I adjust the limit. And I don't really care about risk reward ratios. Because I don't like losing more than 50 pips in any scenario. So even if I'm going for 300, a 50-300 should be your proper entry. Okay? If I'm going through a rough patch, I'll cut my lot size in half and do 100-300. Okay? And I'll swing. Okay? The reason I say 300 is just analyzing my history, me personally, my stats. Something goes weird around 300 pips. It turns gobbledygook. So I very often like to just take profit and then regroup. That's it. Just take profit, get another trade. Don't worry about it. Okay. So that's why I say 300 a lot. There's no other magic. It would be a meaningless number for you, but for some weird reason, it's important for me. Okay, what should we do? Beast. So our trade plan yesterday was, let me clear this up. This, right? That if, okay, now look at it just from this point of view, you know, this area beyond. Look at everything to the right. If you needed this to go up for the month of November, lower than this double bottom is, well, it just ruins it, right? Just ruins it. It has to go up here. I really don't like this giant drop. I don't like the sell at the obvious pivot here, like all of that. I just don't like any of it. But if you had a bias of it going up, it has to do it here. Basically, we're done for the whole month of November. Like I think Ryan called it the Alamo. Gold, Robert. Our analysis of gold going up, creating a weak dollar. Okay. So anyways, the line in the sand, right? So I bought it yesterday. I bought it here. Obviously playing a bottom. Okay. Any questions? not a good trade. It's sort of a desperate trade, but it's sort of like that's that. When will I may never do it. I don't know. Not anytime soon. I mean, it looks like it's about 25 pips now. I'll take profit like as close to Christmas as possible, Michael. Or really, ideally, January 1st. I'd like to hang on to January 1st. Let's put it that way. My vulnerability kicks in around Christmas, though. Because you're either first or you're last, Michael. Yeah, nobody follows that. Yeah, well, you've missed about 1 year of explanation. All right. So it's seasonality. If it goes up, it should go up till the end of the year. And then I'm going to short all the Japanese yen pairs. Okay. Well, Michael, will you hang with us every day for the next year so that you can get the full, complete business cycle over time? Hey, I have school. I'm using that as a lame-ass excuse. You're like, but I'm only 14. All right, all right, all right. So USD yen. Yesterday we said this was our LMO. So zooming in, I bought it just above the monthly central pivot point, weekly support pivot point. My trade's right here. I'll adjust the stop for you. How's that smell? Okay. So, I'm not rocking the pips here, but it's okay. It's hanging. I know it sucks. It's not a great trade. I get it. I get it. I got it. I know it's good. My trades are tight. You wish you could. I get it. It's not great. Got to give it some time. Looking at here, let me go into a smaller time frame. I bought at the monthly central pivot, which is just above us right in here. I'm losing some money, but I'm okay because this is sort of our area, right? My stop is just below that because that is our previous area. So I'd like for this to go back up, but I'm not going to be too patient. If it doesn't go up, I'll get out, and then I'll look at it down here. I'll look at it down here. But I kind of want every yen pair to go up right now. Because if this goes down, then we're going to break support on the other pairs, and then all bets are off. Seasonality is dead for 2018. You had a great September. You could have made 1,000 pips on pound yen only, right? And October, November, December will just go down in the books as disappointing. Hey, it happens. Okay. We did pound, did USD. Did we do Aussie or did I just do Aussie? I can't even remember. Well, let's do Euro. Okay, let me drop into a 15-minute chart. So yesterday we identified this area as a potential bottom. A double bottom there. I guess we did this earlier in the week. And now we're back up above the M2 pivot and hoping maybe to work our way up. Dollar weakness would create this. Yen weakness would create this. Right? Because remember, if the US dollar is weak, Euro USD is going to go up. Okay? So I bought it here, just above the pivot cluster, right? And I'd like it to go up. This is obviously the line in the sand, right? Do I really want to hold this long if we make a lower low? So it's pretty desperate, isn't it? Oops. Okay. Oh, and you can see I'm right above the psych level too. So I bought it at 132.000000. Okay, so we did euro, pound. Did we do CAD yet? Guess not. I don't think so. All right, let's go back. Not a good area. I think it'd be more ideal to wait. You can see last week we predicted this heading up into here. So what we've been waiting for, oops, is something like this, and like this. For that to work, US dollar should weaken, oil should go up, yen should weaken, positive trade data out of China, that kind of stuff. So there's an up, right? The down sort of happened, and maybe we're working our way up. What do you think? Because of that. Get rid of this crap. All right, and oh, probably Aussie. Where's our line in the sand? If it goes up, kind of has to go up here, right? I don't want to be in the middle of November having lower lows. So the sad thing is if I happen to be a bear, okay, this is a sell zone. Oops, let me do it in blue. This is a sell zone, okay, this is a sell zone. If I happen to be a bear, and this is actually a sell zone, okay. So if I happen to be a bear, this is all good because this was payday. This is an obvious retracement on this, right? And that's what you got going on if you're a bear. Except 6 months ago, I wasn't talking about that, so I'm still stuck on my bias. And this is where my bias breaks. So pray never hurts. Okay? And I bought it right here. So hopefully it stays above the pivot cluster and works its way up. Doesn't have to go up quickly. Okay? I think that's it, right? Kiwi, Aussie, USD, yen, CAD yen, pound yen, euro yen. That's everything, right? I think I have another one somewhere. Kiwi. Huh, no wonder. I'm like, this isn't Kiwi. Well, I have Kiwi here. I'm like, this isn't right. Something's wrong. Well, it's not Kiwi. All right, so let's go there. So, New Zealand dollar versus US dollar. How do you trade this? We have it coming down. Then we have it consolidating. Then we have a breakout pullback buy. See? How do you feel about that one? The problem with Shaw is I think there are now 3,000 videos associated with my work. It's pretty amazing, isn't it? It's a lot of videos. It's a lot of videos. Namaste. Who was that? Alan? Namaste, Alan? So, is anyone going to be in Dubai on Monday or Tuesday or Wednesday? I guess I would want to be home by then. I leave Saturday. I get there Sunday. I get there Monday at 2 a.m. I got some client meetings and stuff there, but we could do a meetup. Yeah, there's a cigar bar in the marina I like to go to, right across the street from the Ritz-Carlton. I wonder how I found it. Oh no, south. Well, you mean the mall, the marina, the mall marina? That's over by the highway, right? No. Yeah, no, I like the one in the marina. I don't like the one in the financial district. I didn't like that one at all. Oh, I got a meeting, I think. So anyways, but I like the one in the marina. It's great. Especially because I can walk across the street, smoke a cigar, and then walk back in the hotel and have a cocktail. Yeah. Yeah, good. Yeah, well, that's what you got to do. It's how you do your business, right? So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. Thank you for being a client of TradersWay. Thank you for your patience with me every day. You get my good, my bad, the ugly. Sometimes I'm in a good mood. Sometimes I'm in a bad mood. Sometimes I have rest. Sometimes I haven't slept for days. I mean, but it's real. Yeah, see, I don't even know. I don't have a plane ticket. I don't have anything set up, but you know, there's talk like, hey, we should get together for dinner. I'm like, okay. But you know, it's not an uncommon thing for me, right? So I'll let you know. But let's say if for some reason, see, I get there Monday. Yeah, so I should be able to do the webinar on Monday, even if I leave on Saturday. It should be fine. It'd be coming home. I'd probably miss a webinar just because I'd be hanging out in Amsterdam with awesome people, right? Yeah, cool. Well, Martin, just in case it happens, send me an email, wayne@fxbootcamp.com. Okay? Yeah. Martin? Yeah, wayne@fxbootcamp.com. Wayne@fxbootcamp.com. All right. Wayne@fxbootcamp.com. Is it spelled right? Yeah. .com. Email me just in case I leave for Dubai tomorrow afternoon. I don't even know if I'm going. Yeah. All right, guys, take care. Look, here's my Rob Booker impression. Have the best day ever.